Hey traders, Nick Shaheen here talking about levels and how important it is to keep good levels, especially for somebody who's trading short term. Ideally, I don't like to trade short term. I like to set a bet long term and forget about it. Sell some spreads or puts or even calls. So here's what am I looking at here? NVAX. So Novavax. Well, this could be a start to the lesson. This is not the lesson I had in mind, but okay. So Novavax had a good upside potential to rip a lot higher based on a technical, and went long, shared it, and profited into the top. And I said, you know what, I'm exiting. I forgot where I got out, somewhere in this candle. Not because I had perfect timing, because I don't trust upside potential in these markets. So booking profits often and early is okay with me, and missing out on potential profits is definitely okay with me. And look what happened since then. So anyway, today his lesson is in the VIX, and actually the VXX, which is a derivative of the VIX. So I'm going to bring a picture and a note. So sometime in the morning, I was watching the VIX, and I shared a 42.5. You know, when markets were rallying, I said, you know, the VIX is still healthy, rallying with the market. So I pay attention to this level. 42.55 is what I said would bring some, would be bad for stocks, or not good for stocks. Intraday comment. Sure enough, boom. You know, regardless of what happened, Art Cashin came out, talked the market down into a big candle, and then from there, bonds ripped because money flees stocks. Now bonds pay a little bit, so they can. The traditional inverse relationship of stocks over bonds is working, and today you can see it. It's palpable, and you can see evidence of it by the XLF. XLF falls when bonds rip because they're tied to rates, and when bonds rip, rates fall. XLF follows. Last week we had a few instances where this relationship kind of broke down. Markets were falling on falling bonds and rising bonds, so it was like a tag team of bad things going on last week. One of them I called Casper. I couldn't find why stocks were falling, so I just chalked it up to I'm missing a piece of the puzzle. Today is knowing that 2.55, 42.6, let's call it, or 5, was a trip level for stocks. So if I was long stocks, this would be my stop as soon as they go above it. So I know that there's going to be some follow through. That is if I was trading actively, like if I'm trading futures. If I was long the ES, that would be my stop. If I'm shorting the ES, it would be my time to get in because I know there's going to be follow through in that direction to a certain degree. So in, out. Or if I was looking to sell a put spread, you know, I know that or a call spread, I know not to sell it because of that. So if I was looking to short the market with a credit call spread for the SPY for the sweep, for example, I would wait to see 42.55. If it broke through, I would let it ride and then decide to sell it thereafter into the fear. So knowing levels is totally important, and this is the one short-term level. Now there's a little bit of slightly longer-term side note. This is the VIX, 25.94, 25.94 exactly, both days. So, and they were scary days. Yesterday was a really scary day, yet it was 25.88. That raises a question. Was it a coincidence they weren't paying attention, or maybe my quote wasn't correct and it was 25.94? Nevertheless, why get there 3 times and not break through within pennies on a really scary day? I mean, yesterday was a really scary day, 400 or 500 Dow down points. So now it becomes a threat, but a sign. Are the sellers getting exhausted? We touched the 25, 30, whatever everybody wanted to see on the ES, on the S&P, the February lows. But then the people that were calling for it, they were saying, you know what? It wasn't scary enough. They got to it too orderly. It was like, really? What the heck do you want? Okay, so that is another note. Side note on levels. 25.94, 25.94. Why 25.88 or whatever the heck it was? Why not 25.95? All right, so, and look at the zone up here. No, not the same line, but the zone, a lot of peaks. So from here, we're going to probably need a catalyst. Now the Fed talks tomorrow, and it's a coin flip. I have no idea what they're going to say. Consensus was that they're going to raise rates. Now it's creeping in that they might not. That scares me. Now, maybe there's too much hope that they might not. And if they do, we might fall. All right, Nick signing out.